All right, great pleasure. We bring in Joe Lavorgna, counselor to the Treasury Secretary. Joe, welcome as always. Our good friend, yours and mine, Steve Moore, wrote a piece today in the Wall Street Journal. Trump's tariffs on aluminum kill U.S. factory jobs. They're costly for companies that use the metal to make things, including recyclers. I just wanted, Steve's going to be on in a moment after you, after the break. You have a thought on that? What is the rebuttal from the administration?
Larry, Steve's a great guy, and I get Steve as an ardent free trader. But I do think there's some issues as it relates to economic security. And broadly speaking, as you know, the tariffs have raised tremendous amount of money. And what I would tell Steve is, look, the one big beautiful bill has a lot of great pro-growth incentives, not just the CapEx boom you've alluded to, but also, as we've talked, a real recovery in factory investment. And if there's any negative externalities associated with a specific policy, that certainly will address it. So I'm not really concerned about the effect on the industrial side at all, quite the opposite.
I mean, you know, it's possible people might build some new aluminum factories.
That's the other thing, Larry. That's a great point. Yeah.
You've got incentives, immediate cost expensing, for example. Mr. Trump was talking about that in Britain, about the incentives and the 100% immediate depreciation and so forth and so on. I know we haven't built any recently, but you know what? Maybe we will now. How about that? Well, that's a possibility.
Yeah, Larry, when you look at industrial production, look at a long time series, and you see that, over the past 4 years or so, there's been no growth in production, and we need to, it sounds very elemental, we need to get back to building things. And as you know, the president likes to build things, in the tariff structure with the abundant energy and the low deregulation and low corporate tax rates. All those things should encourage production. Yes, so bring aluminum production back and other technological industries of the future, data centers, structures, all those things.
I mean, you never know. Incentives matter. Incentives matter, and you never know how this is going to turn out. Could be much better than people think. The stock, we just had people on, Liz Klayman and so forth, John and Jerry, and the stock market is roaring across the board, including industrial companies. So that's got to be a good sign for the future. Joe Lavorgna, the Fed should have done 50 basis points yesterday. Steve Myron was right, if you ask me. What do you think?
Steve makes a very, I don't want to speak for Steve, but I'm guessing he's going to say, look, if you look at the payroll data today, it's 29,000 per month. The economy that the Trump administration inherited was not robust like the Biden people had said. It's actually quite weak. Fortunately, the policies now are undoing a lot of the damage that was done. Last year at this time when the Fed cut, the payrolls were 116,000. So if I'm reading Steve's mind, yeah, a larger recalibration makes sense. The good news, Larry, though, is the Fed is committed, it seems, to cutting rates further. The fundamentals warrant that. And by the way, while the economy is booming, as you know, under the first Trump administration, you had very strong growth and low inflation. We're getting supply-side-led growth. When you invest in capital, when you invest in buildings and structures and capital outlays, that actually allows you to produce more with less. It raises the speed limit and actually causes prices to slow.
Might help mortgages, might help housing. Housing looks like it's the worst part of the economy right now. So mortgage rates need to get to 6% or less. That's why I want the Fed to nudge them down. They just don't seem to want to nudge them down, Joe.
No, the good news is, Larry, the financial markets, the equity market, I think, is anticipating lower rates going forward, so that's positive. Housing is a concern. Affordability is low, and that's largely at this point, Larry, because interest rates are historically high. But, also, Larry, with these tariffs, we're raising lots of money, and the fiscal side is getting better.
All right. I got to jump, Joe Lavorgna. Sorry, there's never enough time, but we appreciate it very much.